Hello and welcome to Money in Motion video blog. This is Dan Perkins and thanks for watching. Today we're going to go back to chart school and we're going to deal with what the charts are telling us about some stocks and about some markets. I've said to you in the past that patience really is its own reward. Sometimes it gets frustrating when you see nothing happening and you wonder if we've got the right things. Those of you who have been in Gilead with us for a long period of time have seen how that's worked out. I want to take you to a chart now to Mankind. As you can see on this chart, excuse me, Mankind has been drifting downward. It hit a bottom, and within the last week it's gone from the low fives to almost 7.5. That's a 50% increase in about 5 days. So you can see the spike up in this chart, and what it's telling us is that there is indications. What we want to look for is where the stock is going up, and is it going higher when it goes up, but importantly, is the low when it sells off higher than the previous low. A momentum shift is indicated by higher lows and higher highs. So if you look at the chart, you can clearly see that over the last week or so, we've set higher highs and higher lows. We are approaching in the $8 range a very important, significant resistance level. And I think given the momentum, the fact that the drug is now out of the marketplace, the Afrezza drug, we may be seeing a little better earnings in the second quarter, reported probably in July, and maybe the market is anticipating it. So this is a stock that we've had for a while. We have it at a much lower cost basis, and we're making a very good amount of money on this particular stock. Am I going to sell it? No. I think it's, as I said to you when I first put it on, the longer this stock can go as a public company, the more likely the scenario that it gets bought out. And I think that the likely scenario is that once they find another drug to use this puffer platform, that's when the company, I think, will come into play. We'll have to wait and see. Another example of higher highs and higher lows is the 10-year Treasury market. Now, I've done a chart here that shows the direction of the 10-year Treasury from its low last year with compared to our insurance position, which is the TBT. And as you can see, while the 10-year Treasury is a specific term, the TBT is not a perfect match. It's 20 years and out. There is no 10-year equivalent. But the point is that it's tracking as the interest rates went higher. The value of TBT increased in a proportional, almost linear basis as interest rates rise. The markets are considering that the Fed is going to raise rates probably sometime later this fall. I'm not so sure that they will. A lot will depend on what happens with second quarter GDP. The big jobs number we had last week was a false positive in that we need about 250 to 275,000 new jobs every month in order to just take care of the people that are coming into the workplace, not expanding the workplace. This chart has me a little bit concerned. Here we have an example where we're setting higher highs and higher lows, which tells me that the momentum in the 10-year market is moving to higher interest rates. 2 3/4 would be a major test area. And we'll watch and see what happens. But this does have me a little concerned. This is one of our key indicators, and it's the only one that's sounding a signal. Gold is virtually unchanged, and the dollar is pretty stable, but the yield on the 10-year Treasury has risen quite a bit recently. The other important thing about this energy chart is the fact that the things that we own have direct correlation to the price of energy. So as the price of energy recovers over the long term, these particular stocks will do well. I realize you've seen a lot of charts and perhaps you might want to stop the tape at various points and take a look at them. What's important in these charts is that the portfolio ideas that we've put in place and have been putting in place are the right strategies. They're holding up well. Our portfolios are outperforming the market, and we have lower volatility than the market. I think the portfolios are extremely well positioned. It will take time, but the patient investor is the one who makes the most money. I'm really excited about what's going on with Mankind, and I think our energy portfolio will continue to improve. So class is dismissed. If you have any questions, please feel free to give me a call. And if you have friends or neighbors who are looking for a real money manager, please give them my name and number. This is Dan Perkins, and thanks for watching.